Today, I'm diving into a topic that is on every woman's mind, but that no one really wants to talk about. Is your financial advisor actually doing the job that you've hired them to do, and why it's necessary for you to do a financial audit every year? Welcome back to the Women Growing Wealth podcast, where high earning women come to sharpen their strategy, deepen their discernment, and build with clarity and calm power. If this episode expands you, supports you, or sharpens your thinking, take 10 seconds and leave me a 5-star review, or hit that subscribe button if you're listening to YouTube, and share it with a woman that wants to also grow her wealth. Now, let's get into this topic of, is your financial advisor really doing the job that you've hired them to do, and what's really going on behind the scenes? We're going to actually ask the questions today. Let's get into it. So I'm going to dive into a question almost no woman ever really thinks about. We make money, turn it over to a financial advisor, and then kind of set it and forget it while we're going about our business. But the truth is that many women find after years and years of investing that they really didn't make the amount of returns that they thought they were going to make, and that their fees were a lot higher than they thought. So the question of, should you fire your financial advisor? I'm not asking in a dramatic way, not in a rip the Band-Aid kind of way, but in a sophisticated, data-backed, wealth-building way that every woman with money should evaluate at least once a year. So this isn't about being skeptical. This is about really asking the questions, because most women think, well, I'm not a financial advisor, so if they tell me that this is supposed to happen and this is how I'm supposed to invest, then it must be true. Now, that may be the case. You may have the best financial advisor on the planet, but unfortunately, there's a lot of miscommunication between a client and a financial advisor. Real safety and wealth doesn't necessarily come from trust. It comes from transparency and the ability to audit, the ability to ask hard questions. The truth is, no one ever told you that you could even ask your financial advisor questions. Most women just think, well, isn't that rude? Isn't it being presumptuous? Who am I to think that I can ask these questions? And here is the thing that no one ever says out loud. 96% of actively managed funds fail to beat the S&P 500 over a 10-year period. And that is a fact. We know that. Even Ray Dalio, Tony Robbins, many of the greats have popularized this statistic because it reveals a core issue that every woman should at least pay attention to. Most women are paying premium fees, anywhere from 0.75% to up to 2% annualized on all the money that's invested. Now, when you're paying that money, that already is coming out of any proceeds that you make. So if you're being told you're making 5%, you actually might be making only 3%. And before you get emotional or loyal or polite about your financial advisor, let's just get factual. The question is not, do I like my financial advisor? The question is my advisor producing the results that justify their fee? And that is a legitimate question. Most of my clients don't even know how much their advisor is even charging them. So before you make an assessment about this, you want to ask this powerful question. Do I assume I know what's happening with my money, or do I actually know what's happening with my money? And that might be a big aha for many of you, because this is where a wealthy woman separates herself from a woman who is not taking charge of understanding exactly what's going on with her money. So a wealthy woman is going to know exactly how much they're paying and what they're getting and what their returns are. One of the things a lot of women that I work with never realize is they don't realize that all you need to do is look at your cost basis, the amount that you actually put in on the year that you put it versus what you have right now in that account. That will tell you actually how much money you've made. And if you want to know what you're being charged. And if you want to ask your advisor to walk you through your statements, that's absolutely legitimate. And I'm saying this almost like some women might be like, duh, I know that. Obviously, I can do that. But women don't do it. And that's why we're having this episode. That's why we're having this talk right now, ladies. So, this is the thing, you can send your advisor this exact quote, and you can actually take notes on this right now. Can you explain my investment strategy and the benchmarks you're measuring my performance against? In just a paragraph, in plain English, just one paragraph. And can you tell me what my fee is and how much of a return I've actually gotten over the period of time that I've been investing? And this question is going to answer something for you that's very important. If your financial advisor can't explain the answer to that question clearly, it means they don't really have a strategy. And if they don't really have a strategy, that's something that you want to pay attention to. It may be that their strategy is just putting your money in S&P 500. And if that's the case, then you can put your money in the S&P 500 and not pay a 1% fee annually, because that's something that anyone can do. The real strategy is really simple, visible, and intentional. So if you get a response that has a dissertation of jargon and it sounds overly complex, then it's probably not really working, because you should really be able to understand what your financial advisor is doing. Sometimes diversification can look like a strategy, but if you really analyze it, they're really just doing what an ETF or an S&P 500 will do, which is investing in a basket of funds, but they're just moving things around. And oftentimes, remember the first note that I told you, which is they don't beat the S&P 500. Now, if your financial advisor has been underperforming in the market, it could be that the market has not had a great year and it may not be their fault. You really want to be looking at that, though. You want to be asking, okay, what are the benchmarks? And if they didn't perform in a year that was down, how did they do in the up years? And what's the overall average? So you really want a benchmark for this strategy. And you want to be able to understand where your money is being invested, especially because a lot of women have a lot of money in the stock market. They have their retirement accounts there, they have all their savings in there. And if it's not performing well and everything is being relied on this financial advisor, you really need to be asking those questions. So once you ask those questions and you're understanding the relationship better, you want to look for five flags when it comes to, okay, maybe they're not doing the job that I really need them to be doing. And it's not about a communication issue, it's more that things aren't really working out. Okay, if the fees are over 1% and there's no strategy, that's not a great sign. I had a financial advisor for many years and they were very supportive of me, and I wanted to keep that relationship going. But when I looked at what the proceeds were and the strategy, I really wasn't making any money. In fact, I was losing money. The stuff I was making money on was when I would say, why don't you invest in this? Why don't you invest in that? So if you're paying a premium, but you're not getting returns, then they're just maybe babysitting your portfolio and maybe not babysitting it that well. So that's something that you really want to look at. Now, the other thing you really want to be careful about are mutual funds. Mutual funds, not only does the financial advisor charge you fees, but the mutual funds also charge you fees. So 15 to 20 funds of mutual funds, 15 to 20 mutual funds isn't sophistication. It's really just camouflage, and it's a disguise for a lot of people making a lot of money on your money that's already hard enough to make and keep. That's something that you really want to look at. Here's another red flag. This will be number 3. The performance below the S&P 500 or below the market index is a sign that you could have just put it in the S&P 500 and you didn't need to pay someone else to manage it for you. It just shows that you're basically paying for something that you don't really need. And I know I'm harping this over and over, but it just takes 10 minutes to go through your financial statement and to ask these questions. And I know that women do this because I did this for years and I paid a lot of money in fees and I really wasn't getting what I needed. Now, granted, there are some amazing financial advisors, and I'm not saying that every financial advisor is not needed, but these are are questions that you really want to be asking to ensure that you are getting exactly what you are paying for or what you think you're paying for. Verify and confirm. Another flag you want to pay attention to is to ask yourself if you're feeling dependent on your advisor to interpret your own money. So you may feel a little bit confused about handling it. And so you just feel like they're going to know more and they're going to have more control over it. And I had this for years where I just completely would trust someone else over myself, over my own knowledge, and over any kind of wisdom that I had because I felt like they knew more than me. And so you really want to be paying attention to all of these flags and make sure that if any of these are happening, that you're having the conversation and not being afraid to either just put your money in an S&P 500 until you find another financial advisor that feels better to you, or, maybe join a community like Women Growing Wealth where we do checks and balances and you can manage your money pretty much by yourself. Especially with stocks, you're in a more set it and forget it for the most part. You really shouldn't be going in and out of stocks anyway. That's another flag you want to be looking at. I had a portfolio at one point where a financial advisor was just buying and selling and buying and selling. And if that's in your personal account, you're paying tax on that every time. Now, if it's in your retirement account, you are not going to pay tax on it because it's all in the retirement account. It's all deferred. But these are things you want to pay attention to. I mean, if you're just dancing but not making any movement, you just need to do that quick math on that. Okay, now that I've completely torn up what a financial advisor could do that is not working for you, let's talk about some of the things that do work and when you do want a financial advisor. So they can explain your plan in plain English. If they really can explain your plan and you can see how much of a return you're getting and it's not vague and they're very clear about how they're managing your money and what kind of returns you're getting, then that is something that you want to pay attention to. And that is a good thing. A lot of times with financial advisors, they will ask you, are you conservative? Are you risk averse? Well, no one wants to lose money. So in my opinion, I was always like, yeah, I'm risk averse. But then they would just put me in things that made like 3%. And then they were taking 1% and I'd make 2%, which doesn't even beat inflation. Okay, let's talk about another thing that they could do that is really beneficial. They can anchor everything as benchmarks. They can show you like your market performance, your total return, your risk adjusted return. And it's not about just trust me. It really is about like a strategy that they have in place and they're really supporting you and they're walking you through and they're helping you with all the wealth building tools. Now, remember with financial advisors, they don't work in real estate other than REITs. So if you want to invest in real estate, you need to keep allocations out of the stock market because financial advisors are just not trained in real estate. And that is one of the best tax advantages. We talk about this a lot. One of the best wealth building tools, of course, 99% of millionaires are made through real estate. So that should tell you something. Let's talk about sometimes when financial advisors actually do understand some tax strategy. And that can be very helpful for you, especially if they're talking about tax harvesting, where you have a big win one year, but you have a loss one year. If you offset that, then you can offset the taxes. And that can be a good strategy. A lot of times they're not tax strategists. They are there to build your portfolio. So they're not necessarily going to tell you that there's a strategy you can use to save on your taxes necessarily. So don't rely on them for that. Know what they're there for. The other thing I want you to pay attention to is how much support they're giving you as a financial advisor. Because a lot of times, just if you're able to just go and pick up the phone and they're able to give you some good advice or help you with the next move, if you got some money coming in and you don't know where to invest it and they're really easy to communicate with, that is a great thing. I mean, it's pretty obvious, but you want to know the difference. I want you to see the difference and really think about this because the truth is a lot of people should be firing their financial advisors. And that's just a fact. And it's just point blank. I'm going to say it. I'm going to say it here. Some people need to get rid of their financial advisors. Here's a reframe for a wealthy woman that I want to bring into this conversation because even though I'm speaking pretty candidly about, hey, sometimes we need to fire people. And, some of my clients have hundreds of employees and they can fire them all day long if they need to. But then when it comes to the financial advisor, they're just like, oh, I don't know. I think I shouldn't do it. Remember, never apologize. Never apologize for protecting your wealth, because at the end of the day, nobody cares more about building your wealth, about your sovereignty, about your family, about your legacy, about how you take care of your children, about what you do in your life. Nobody cares about it more than you do. So you have autonomy on this. You just need to know how to audit that relationship and feel confident in auditing it, because your wealth deserves those high standards. So to wrap this up, I want to review. Do you understand your strategy? Do you understand your fees? Are you outperforming the S&P 500 or an ETF with your financial advisor's advice? And is your advisor adding value or just adding noise? Or is it just a kind of this false comfort when they're not really providing the value that you really want them to, based on the amount of money that they are costing you? Because while you might say, well, it's just 1%, well, remember, your money is going up every year, your income and your net worth. And every year it's 1%. And that really adds up. That can be a difference of quite a bit of money. So you don't have to fire your financial advisor, but you do need to evaluate them. Your money is not neutral and either is compounding or leaking money. So we really want to stay on top of this. Remember, a wealthy woman does not leave her wealth on autopilot. She's going to audit, she's going to upgrade, and she's going to choose. And even when it's painful, and it's a pain to change CPAs or financial advisors or whatever it is on your financial team, every year you want to evaluate, is this working for me? It's just another piece. Just like running a business, you are running your wealth empire, and it deserves that much attention. Now, if this episode spoke to you, please subscribe so you don't miss what I'm going to talk about next week. And if you are listening, leave me a 5-star review, please, because it helps me get this out to more women so they can grow their clarity, confidence, and their power. I'm Tamar Hermes, and thanks for listening to the Women Growing Wealth podcast. I'll see you next week.